More news out there this morning about activist investor Dan Loeb, who Leslie just mentioned. His Third Point hedge fund taking a reported billion-dollar stake in Disney and calling for the entertainment giant to spin off ESPN, take control of Hulu from Comcast faster than it's required to, and refresh its board. Joining us right now for more on all of this is Michael Nathanson. He's Nathanson's founding partner and senior research analyst. Also Sarah Fisher, who is Axios media reporter. And let's start with you, Michael. Just the idea of spinning off ESPN Plus, or spinning off ESPN, it would allow Disney to do some pretty interesting things that Loeb lays out. He says, look, you could be involved in things that Disney couldn't, things like sports betting. Does this make sense to you?
They can be involved in sports betting now. The problem is that ESPN, as a standalone, would trade terribly, right? There would be no value creation by getting ESPN off of Disney at this point. And sports gambling, they can do now. There's tons of small entities that would like to partner with ESPN. Those companies also burn a ton of cash, right? So I'm not sure how getting ESPN off your books, levering it up, facing the secular headwinds it's facing, and then adding sports betting to it would be an attractive play for a lot of our clients at this point. You
mean long-term clients versus those who are looking for a short-term pop?
Well, the short-term pop, if you look at Warner Bros. Discovery, that short-term pop never happened, right? So I think the market's onto this, which is these are secular challenges. The market could effectively value that, ESPN within Disney. I'm not sure getting it out on its own is going to be that attractive for either short-term or long-term investors at this point.
Sarah, how about you? I mean, this did cause a bit of a splash because we've been so focused on what's happening with streaming and how the market has changed its perspective on this so quickly. What do you take from this?
I tend to agree. I also think that ESPN, while combined with Disney's bundle, helps Disney's streaming strategy long term. And if you take a look at where Disney's been positioned in the past year, Wall Street really wants to see these companies start to drive profits. They've actually seen some growth in their advertising business thanks to live viewership of sporting events. So ESPN is not the black sheep that it was even just a few years ago. The other thing in Dan Loeb's letter about Hulu was also interesting to me. If Disney was to aggressively go after Hulu before that 2024 deadline with Comcast, I'm not sure, it materially changes their strategy long term. I don't necessarily think that the premium that they would pay for it would be good for Disney, given how much they're already spending on content and how much, there's pressure, including from Dan Loeb, to reduce costs as is.